Good morning, viewers. Welcome to ST Money's Morning News, your weekday business news channel. It's Monday morning, September 16, 2024, and I'm your host, Sunil Thakker of Sunny Talks Money. Let's roll. The US stocks advanced on Friday and gold continued to hit record highs as investors look to whether the Federal Reserve might move more aggressively to cut rates at its policy meeting this week. The chances of the Federal Reserve kicking off its easing campaign this week with a larger zero point 0.5 percentage point cut in interest rates have picked back up. The rethink on the Fed's next move has pushed major US indexes towards a strong week of gains. The Nasdaq Composite and S&P 500 rallied about 6% and 4% respectively for the week, marking a sharp contrast from last week's gloom. Stocks finished Friday in the green. All three major US major indexes closed higher. The Dow Jones Industrial Average was up 0.72% to 41,393. The S&P 500 jumped 0.54% to 5,626, and the Nasdaq Composite surged 0.65% to close at 17,683. The Russell 2000 index rose 2.5%. Tepid inflation and other economic data earlier in the week suggest the Fed might be willing to start slow as it cuts rates for the first time since 2020. A traditional 0.25 point cut to benchmark rates has remained the most likely outcome of Wednesday's Fed meeting. The dollar index, which measures the currency against the yen and five other major rivals, dropped to a 1 week trough at 101. It last stood at 0.05% at 101.11. The benchmark 10-year Treasuries rallied, pushing yields down 2.1 basis points to 3.65886%. Yields on the 2-year bonds, which closely track interest rate expectations, dropped 5.9 basis points to 3.5803%. Gold headed for its strongest weekly gain since mid-August, up 0.9% to 25,582 an ounce, driven by dollar weakness and looming rate cuts. Crude oil regained ground in late trading as U.S. production restarted following the passage of Hurricane Francine. U.S. crude was up 0.29% to 69.17 a barrel, and Brent grew 0.13% to 72.06 per barrel. After a couple of years of technology stocks leading the market higher, investors in the last 2 months have shown an appetite for other sectors. As a result, money flew into other corners of the market, including utilities, real estate, industrials, and small cap stocks. The risk is that what seems like a rotation away from tech and artificial intelligence may not be much of one after all. Stock markets are likely to trade sideways until US employment data show clear signs of either weakening or strengthening. A clear direction for jobs would resolve the autumn ambiguity after non farm payrolls climbed by 142,000 in August, lower than economists' expectations. Corporate highlights. Donald Trump sent shares of his social media startup soaring after he said he had absolutely no intention of selling his stake when a lockup period is set to expire late next week. United States Steel Corp surged after Washington Post reported President Joe Biden wouldn't immediately move to block Nippon Steel's corporation's takeover bid. Adobe Incorporated tumbled 8.5% after the company issued an outlook that disappointed investors who are growing impatient to see new artificial intelligence tools generate cash. Uber's shares rallied more than 6% on the news that Waymo plans to use its app to offer self-driving cars in Atlanta and Austin. Boeing Company is at risk of losing its investment-grade credit rating as the embattled plane maker faces the prospect of a drawn-out strike by workers that will further disrupt production and cash flow. Oracle Corporation said annual revenue will rise to at least $104 billion in the fiscal year to 2029, an optimistic signal on the growth prospects of the software maker's cloud infrastructure business. CoreWeave A cloud computing provider that's amongst the hottest startups in the artificial intelligence race is in talks to arrange a sale of existing shares, valuing it at $23 billion, according to people with knowledge of that matter. That's it for today, folks. See you tomorrow morning. In the meantime, let us know in the comment section what are your thoughts for the market today. Happy investing, stay inspired, and remember, it is all about money.